Welcome to this week's edition of the Construction CPA's Coffee Cafe. I am the Construction CPA, Lisa Raish. We are dropping the hammer on cash flow problems so you can build things that matter. This week, I am very lucky to have someone here with me. I have Gary Zimmerman from eBacon, and we are going to be talking about fringe benefits. Gary, tell us a little bit about yourself and eBacon.
Hi, everybody. I'm Gary Zimmerman. I'm the Director of Strategic Partnerships at eBacon. We're a financial technology platform that works exclusively in the construction industry, and our focus is those folks that do prevailing wage work for the government, so they're required to pay prevailing wages and fringe benefits, which is why I'm here today.
Wonderful. All right, so let's jump a little bit into let's jump right into it because prevailing wage is honestly it's a specialty topic of itself. So I wanted to make sure that we bring specialty people in to talk about things, especially things like from fringe benefits. So tell us a little bit about exactly what they are and then when the contractors are in fact required to pay them.
Sure. Yeah, it's definitely something there's a lot of confusion about in the industry. So first of all, when you're doing a prevailing wage project, so you're doing public works for the government, whether it's state government, federal government, local government, it would fall under one of the many different prevailing wage rules. The federal rule is called Davis-Bacon. That's why we're called eBacon. It's just kind of a play on that. That rule is coming up on 100 years old in 2031. Yeah, it's from 1931. There are also 32 states that have their own what people think of as mini Davis-Bacon or little Davis-Bacon. Okay. So depending on where you are, you could fall under the jurisdiction of different rules. But in all of the rules, they require you, if you're going to do public work for the government says, look, if you're going to build stuff on our behalf, if we're going to give you money to build something for us, we're going to make sure that you pay, one, a decent wage to your worker for the task that they're performing, and two, a package of money to be set aside to pay for fringe benefits. We want to be sure the worker's getting paid well, okay, and that you're treating them well with fringe benefits like healthcare, time off, all of those sort of things. So there's $2 amounts for every hour for prevailing wage, a wage amount and a fringe amount.
Oh, interesting. Okay. So you could be potentially subject to federal rules, and then depending on what state you're in, they're going to have state rules as well?
Yeah. Like I said, there's 32 states have their own rules. Davis-Bacon for all 50 states would apply for federal jobs, but if you're in a state that has their own, it really just goes to whichever pays higher.
Oh, it does. Okay. I was curious if one supersedes the other, because I know sometimes regardless, certain things, federal supersedes whatever's going on in the states and so on. So if you're doing both federal jobs as well as state related jobs, you're potentially on the hook for tracking and keeping and managing that too as well, because they may not actually meet in terms of what their qualifications are.
Correct.
Wow. Interesting. Okay.
Yeah, that's something people really have to keep track of.
Yes. So it goes back
and
to
it can even get crazier than that. I mean, you could be doing state work on federal property. And now, yeah.
Okay. And again, we talk about record keeping on here a lot. We have some clients we can barely get to keep track of what project their team members are working on. So this is a whole other layer that in some cases maybe isn't even considered when someone is thinking about actually putting in, a bid on a project like this.
For sure.
Oh, wow. Okay. So what options does a contractor typically have for kind of satisfying that fringe benefit requirement?
Yeah. So this is where people tend to do this incorrectly. So you're required to pay those two amounts, right? Let's say for the sake of this discussion, it's $50 an hour for the wage and it's $20 an hour for the fringes. What a lot of people, when they come to us for help, what a lot of people have been doing, because it's easy and it's safe, is they just lump those $2 amounts together and they put them on the paycheck. We call that paying it in cash. It's not literally cash, but right. They're putting it on the check. That they can do that. It's easy because if you can do simple arithmetic, you're done.
Yep.
number one. And number two, it's safe. Nobody can come back and say, well, you didn't give me what I had coming to me. Well, yeah, I did. I gave it all to you. I put it all on your check.
Oh,
So that's the easiest way to do it. A lot of people do it that way. It's also not a smart way to do it,
interesting.
but a lot of people do it. Um,
So what
the other
makes it
thing,
not the smart way to do it? Let me ask you that then.
yeah, so there's two things wrong with that. The first thing is that the money was never meant to be waged. The money was meant, per our first piece of this conversation, was meant to be set aside to provide benefits. And so likely the company is already providing benefits. The contractor is probably supplying healthcare, or at least a percentage of the healthcare. They're probably allowing for paid time off, all those kind of things. And so in our example, that $20 an hour fringe was supposed to pay for stuff they're already paying for.
Oh, okay.
So if you go and you figure that out, it's called annualization. But if you figure that out, you figure out, well, our healthcare is coming to $3 an hour. Our giving them time off is $1.50 an hour, et cetera, whatever that amount is. Maybe that comes to $6 or $7 an hour. Well, $6 or $7 of that 20 is already spoken for. You already have outlaid that money.
Okay.
So that's problem number one. You're double paying on those fringes. Now I should redefine fringe. Fringe is a benefit that is not required by the government. So as an example, Social Security is not a fringe.
Okay.
The government requires you to pay it. That's not considered a fringe. So like I said, if you've got dollars that are spoken for because of the benefits that you are providing, you don't have to pay it again.
Okay.
It comes out of that 20. So if I've got $7 that I can claim, that's called taking a credit against the fringe. Now I'm responsible for $13 of that 20. Mistake number two would be putting that on the check. Now, it's better to put $13 an hour on the check than $20 an hour. That's, you've saved yourself some money, but it's still not great. And the reason why it's not great is because when you put it on the paycheck, you're treating it like a wage, and a wage is subject to employment in payroll taxes.
Okay.
It was never meant to be subject to payroll tax. So you're responsible now for Social Security, Medicare, general liability insurance, and workers' comp. Depending on what your workers' comp rate is, construction is relatively dangerous. Workers' comp rates are fairly high. So depending on what your workers' comp rate is, you're probably looking at 13 to 15% payroll tax on something that was not meant to be taxed.
Wow. Okay. So, wow, it just got really expensive very quickly.
So
Okay.
the worst way is I put the 20 on the check, and remember, these numbers are just for example.
Correct.
I put the 20 on the check and I got to pay 15% on the 20. Bad.
Right.
Second example, I took $7 worth of credit because I'm paying attention to what I'm already paying out. I put 13 on the check. I'm paying 13 to 15% tax on $13. Still bad, not as bad.
Right.
So the other thing that people can do, and what we suggest they do, and one of the things that we offer, and we're not the only people out there that offer it, is called a bona fide fringe trust. And what that does is it takes the 50 and the 20 and splits them back apart and says, here's your $50 an hour for wage that we're required to pay you. You get that on your paycheck on Friday. Here's the $20 an hour, and we're going to put that off to the side, or in the case of taking credits, because you really should take those credits, that extra $13 an hour, we're going to put that in the fringe trust.
Okay.
And that is no longer taxable to the employer.
Okay. Okay,
So
great.
now the employer is just paying payroll taxes on the wage, not on the fringe.
Okay. Wow.
Now, I can tell you one more thing. Employees don't always love this.
Okay.
If you think about it, especially if they're used to the old way,
Okay.
they don't love the fact that, hey, I used to get $70 an hour in our example. Now you're telling me you're happy because you're not paying tax anymore, but now I'm getting $50 an hour. I'm not crazy about this plan. I don't love it.
Okay.
I know the 20 or the 13 is being set aside for me, but I can't touch it because I still work here. and it's set aside for me in this trust. There are multiple trusts out there. The thing that I wanted to just bring up is the thing that makes eBacon's trust a little bit different, and this isn't supposed to be a sales pitch, but just something for people to know, is that we've set our trust up with the IRS so that employees are able to take out in-service distribution on payday, every payday, if they choose, for that fringe money. So it's more of a win-win. Instead of the employees being the loser in this deal where the employer is the winner, now everybody wins, because if the employee is financially savvy and has the wherewithal to play around with that $13 an hour, like use some of it for first-time home buyer or health savings account or children's daycare or first-time or children's college funds, they can do all that pre-tax within the trust.
Oh, interesting. Okay.
Or for the most part, if people are used to making that higher amount, they just take it on their check.
Okay.
Either way, the employee wins, or at least the employee doesn't lose, right? At least they're made whole and the employer doesn't have to pay the tax.
Wow. Okay. So there was a
Yeah,
lot
that was
there.
a lot.
It is. It is a lot. But I think at its core, especially one of the things that we talk about on here a lot is when things like that aren't considered and they're not considered appropriately, it very quickly eats away at the margin that you thought you had on a project because you did not handle, one particular thing, i.e. fringe benefits appropriately. So that's a big piece of it. That's a very quick and easy way for you to eat away at any profit you thought you had on a project.
Yeah,
Wow.
it's one of the things that we talk to our clients about, their ability to bid competitively.
Yeah.
Because if you've got contractor A and they're doing it the absolute wrong way, they're only going to be at one profit margin. If you've got contractor B and they're at least taking credit against the fringe for their benefits, they're going to be able to bid a little bit more competitively. And then you've got contractor C and they're doing it in a really efficient way by using a trust and that sort of thing. They're always going to be able to underbid contractors A and B and make the same amount of profit.
Wow. And that's really the key. That's the difference between, in some cases, especially when it comes to government, where a lot of times it's low bid. If you can be actually low bid, but also still be profitable in this particular case, where unfortunately sometimes we see too often contractors put bids in, they want to be low bid just to be because, but they're barely profitable. So that's the difference between being potentially profitable and not profitable on a government contract.
For sure.
Definitely. Wow. So what are some of the overall financial or the payroll implications of paying the cash? So is that like the what we talked about with like the tax rates? Like
Yeah, it's the tax rates, it's the ability to competitively bid.
okay.
Um, those are really the big ones. And the second one comes from the first one, right? It's really about paying taxes on something that was not supposed to be taxable.
Okay. And now does this also kind of fold into any kind of overtime wages?
The only way that it really folds into overtime is really sort of a common mistake that contractors make. Oftentimes, we talked about the mistake of just paying in cash. That also leads people to make the mistake of when you're paying overtime, they'll take that whole amount and make it time and a half, or that whole amount, make it double time, whatever we're talking about.
Oh, okay.
Fringes, when they're treated separately, are always paid at a flat rate.
Okay.
So while a wage might be time and a half, fringes are still that same dollar amount. Well, if
Okay.
you're treating the whole thing as wage, oftentimes they don't go back and figure that out. They just pay the whole thing time and a half, the whole thing double time. Now they've really multiplied their problems.
Wow. Okay. Yeah. So if we in our example here, you're instead of your $50 an hour, we're possibly at 70 an hour, and now we're going time and half on that 70 versus a 50. Very, very expensive across the board. But then also flushes out into not just payroll taxes, but your workers' comp rates and so on and so forth. Because again, or even your liability, which is typically built on revenue as well as payroll calculations. So
Yep.
very, very expensive oops at the end of the day. That's for sure.
Yeah.
All right. So, how can they use this? Now, the plan you talk about, your trust, is that what we talk about, like a bona fide benefit plan to satisfy this fringe? Or like, are they two different things?
Yeah, it's not really the benefit plan itself. It's called a bona fide fringe trust. And
Okay.
I think most of the ones that are out there are going to be quote unquote bona fide.
Okay.
I think that, I mean, you might run across someone that, is not doing things the right way and
Okay.
kind of shady. But I think, for the most part in the industry, bona fide is standard. And really all that means is that it's irrevocable
Okay.
and that it's being managed by a third party.
Okay.
So, and it's funded so that it's not theoretical money
It's
somewhere,
real
that
money.
it's real money and it's put somewhere off to the side where the company can't get at it. So it's there and it's irrevocable and it's there for the workers.
What typically qualifies as fringe? We've said health insurance, retirement. Like, what else would potentially kind of fall under that umbrella? Or those
Yeah,
the
the big ones are health insurance for sure is probably the largest. Time off is one that everybody, and it doesn't matter if it's old fashioned vacation versus sick, whether it's PTO, however you do that. Um, Another big one is any sort of 401k contributions that the company makes,
Okay.
any sort of matches.
Okay. All right.
And it kind of goes down from there, but those are really kind of the three big ones that are pretty universal.
Okay. What kind of, and this is another big piece of it, what kind of documentation really needs to be maintained in these particular situations? When you're keeping track of, what your benefit plan offers and your kind of your credit against, when you're using the kind of that credit against your the fringe. Like, so in this particular, in our example, you're saying, oh, well, it came up to $7. How are you documenting that seven, or what needs to be documented in order to kind of substantiate that?
Yeah, that's the kind of thing, and I don't mean to push it off on technology, but that's the kind of thing that we help clients with.
Okay.
Is the first thing that we do is we help them take the credits. We help them take, in our example, the 20 down to the 13.
Yep.
And that's done, as I mentioned, through the process of annualization. So all of that gets documented
Okay.
as far as, how much per hour does the health insurance count? How much per hour, does the 401k matching count? How much is it worth? How much is someone's vacation time worth when it comes to an hourly amount? So all of that math has to be done. And of course, that varies per person because they may have a different health insurance rate or they may have a different a PTO rate. This person gets 4 weeks vacation. This person gets 3. So
Right.
that 4-week person, that dollar amount per hour is more valuable than the 3-week or the 2-week person. So all that has to be figured out. And then that all just becomes part of the payroll reporting.
Okay. I gotcha. Okay. So again, something eBacon can support you with, but at the end of the day, regardless, has to be documented and maintained. Okay.
Yeah.
Yeah. And that falls ultimately on the business or the owner of the business to ensure that they've maintained this documentation appropriately.
Right. And I'm not saying that it's always easy. If we go back to earlier in our discussion, why would people possibly just put the two numbers together and pay it out in cash?
Yeah.
I told you 2 reasons. 1, it's easy, and 2, it's safe. Now
Yeah.
you see
So at
what
the end of the day, you're not worried. You're like, well, I'll take the
you
easy.
didn't give me what I had coming to me. Yes, I did. I gave it all to you on your check.
And that's the end of the conversation versus managing this and documenting that and keeping track of that and actually conveying to a team member how it's going to be paid to. Yeah, I get that. That's the
No,
easier.
just because it's not easy doesn't mean it's not worth it,
Yeah, I gotcha. I gotcha.
right?
But I
You
and that
have to
makes
weigh
sense.
that up against, do I want to be, how profitable do I want to be? How successful do I want to be in bidding jobs?
Yeah,
Do I want to go through this process to streamline my payroll?
absolutely. Yeah, there's a lot of things to consider. It's not just the profitability on the project. It is the profitability on the project, but then again, either you're outsourcing this documentation or this management to someone, or in some ways you've got somebody internally who's supporting that as well. Again, there's a lot of things, and you're right. I see a lot of times, what's the easiest way out? Well, the easiest way out is to pay it and be done with it. And the owner's like, yeah, I'm good, thank you. But at the end of the day, when you're really trying to be profitable and maintain and sustain that profitability, then yeah, you've got to actually put some actual additional work in there and put some support staff in there to maintain those things appropriately. So yeah,
For sure.
we see all kinds of things.
I bet you do.
So we talked a little bit about kind of the most common fringe mistakes. I mean, outside of that, like paying everything all together, are there any other mistakes that you tend to see that people will do that cost them either, again, flat out straight like profitability or money, or just, incorrect reporting?
One that I'll mention that we haven't mentioned before, because I think they're sprinkled throughout this conversation, but one would be choosing the wrong wage determination to begin with. What
Okay.
if that 50/20 in our example is incorrect? Now everything's incorrect.
Okay.
And that could be either a mistake, or it could be, again, being lazy or being easy. And oftentimes what people will do is they'll just choose the highest wage determination on a job and use that to pay everybody.
Oh, okay.
So let's say a worker is doing 3 different tasks on a job. They'll just pay them for all 8 hours worked at the highest wage determination
Okay.
because it's too difficult to figure out. They spent 3 hours doing task A, 2 hours doing task B, and 3 more hours doing task C. That's a pain. I can't accurately document that time and attendance. So I'm just going to go ahead and just pay the highest of the 3.
Okay.
Again, not wrong. The employee's thrilled. Your profitability goes down,
Okay.
but that's a mistake that we see. So that's either a mistake or it's a mistake on purpose.
Okay.
And that goes all the way back to time and attendance. And that goes to are you on a paper time card system, or do you have some kind of electronic system that will allow you to change jobs or change tasks or both on the fly?
Sure.
I'm on this job. I'm an electrician for the first 3 hours. I'm changing to a different task. Boom, I take out my phone. I change to a different task.
Okay.
Do I have that ability, or do I have to explain that to somebody to fill out on a piece of paper at the end of the week? On Friday, I have to tell them what I did on Monday, and no one knows. I'm
Okay.
just going to pay. I'm just going to pay the highest one.
Which makes sense. Yeah, you're right. It's more work to try to convey. I mean, we see it too often. Sometimes you can barely get the number of hours somebody worked in a week. Never mind, well, I was at this project this day and that project that day, and I was there for 3 hours doing task A. And yeah, you can't even find out that they worked 48 hours to pay them. Never mind. Okay, so a lot of
Hey,
times
it's
it's just
Friday. Look at all the guys at the picnic table trying to fill out their time cards for the week to talk about what they did and where they were.
where were we on Monday? I
Get
don't
it.
remember. And so as long as one guy knows where we were, like, yeah. So again, it is a lot of costly mistake after costly mistake. Of course, it really comes down to having the right tools in place, like an eBacon tool, or also having somebody internally to support that aspect of being able to report that profitably, properly, and then ultimately maintaining your profitability as well. And that's a big piece of it too. And these are the little things that, again, I talk about on here very regularly that just eat away at your margin that you don't realize have eaten away at your margin. And suddenly, you bid out on a project and you had, 20-30% margin, and now you close and you're at 12. Well, where did it go? Well, a little bit here, if you're overtiming out at that $70 we talked about in the example, and then you are, and then it's 70 across the board, and really it shouldn't have been, it should have been, $50 an hour for this task and 48.50 for that one, or whatever it is. Yeah, that's eating away slowly at your margin. And then you get a project that goes on for a little bit longer period of time. Some of these government contracts go on for months. And
I
so
mean, look how many leaks we just uncovered in 20 minutes, and that's not the topic of our discussion.
exactly. So right, fringe was the topic, but at the end of the day, yeah, if somebody's just doing a little bit of the back of the envelope, they're like, oh, wow, okay, I've just given away how many, and then you multiply that over the number of people that work for you. And in many cases, you don't have just one person working for you. You have 10, 20, 30 guys working for you. And if you multiply that across there, then yeah, that's a surefire way to, surefire way to eat away at your margins.
Yeah.
So Fringe just is not, it's just not, paying healthcare, right? There's a lot more to it, especially when you get into the prevailing wage. So I am grateful to have met you and grateful to have come across eBacon because there are tools that you need to have out there to support you with these things. And it's crucial. You want to be able to accept these projects, but there is, reporting requirements associated with it. So you've got to have the tools in place to support you through those things. So thank you, Gary. Thank you for
Sure.
joining us today. I appreciate it.
Yeah. Thank you very much.
You're welcome. All right. Well, look forward to seeing you here every week. You can find us here. We are at the Construction CPA on all our different socials. So we are on YouTube, LinkedIn, Instagram, and let's see. Oh, Facebook. There we go. I look forward to seeing you here every week, and we'll see you next week.